just a bit of a lead-in to our stock of the day. First, though, to keep you interested, New Hope Coal will be discussed, Whitehaven Coal, yep, Gaurav and Mathan are here, Nanosonics, Webjet, and Omni Bridgeway. But to my point about stock of the day, we had a great viewer question come in over the weekend from Rob. I hope you're listening or watching Rob. He asks, with the substantial rise in oil prices fanning inflation, all further complicated by the disruption caused by Russia's brutal invasion of Ukraine, it appears that the scene is being set for the global economy to fall into recession. He writes, while no one can predict the future, it seems to me that the signs are ominous. I would therefore love to hear from your experts. What are the characteristics to look for in stocks that make them recession-proof? And in doing so, what stock would you choose to withstand the buffeting from any recession or severe economic downturn? So, Mathan, Gaurav, I'll start with you. What is a recession-proof stock and why?
Look, I understand the sentiment behind the question, and there's nothing wrong with the logic, but experience tells me that this is the wrong way to think about investing and the wrong way to go about investing. You know, the concept of investing is putting capital at risk for a return in the future. Risk is embedded in the entire enterprise, and maybe there's a recession coming, maybe there's not. I think the ambiguity of the viewer is really important and intelligent, because we don't know what the future brings. But I think if you're going to try and react to every market turn, you're going to have a very difficult life as an investor psychologically, and you're going to have, I don't think, a very successful life as an investor financially. We can't be here to react to every turn in the markets every time they happen. I think we've got to have a long-term strategy, and importantly, you've got to be optimistic. If you are not an optimistic person, I don't think the markets are for you. I specifically don't think the share market is for you. That's where bonds go.
Right.
If you're a miserable person, go buy bonds. Because
you're not going to make any money on bonds.
Yeah, but you won't lose money either. And I think that's the point, that we can't expect to outperform over the long term without being prepared to underperform over periods of time. And it may well be that the next year or two, everyone's portfolios will underperform. That is the price of outperformance over the long term. The difficulty here, the challenge here is to stay the course, is to look through what's going to be a hard period and continuing doing what has been working for a very long time, which is just buying mispriced bets, buying good businesses at attractive valuations, and being comfortable with buying those things with your personality in mind. So if you're not the kind of person that likes cyclical businesses, then don't do it. If you're not the kind of person who wants to pay high prices, then don't do it. You have to be, your style has to reflect the person you are, but you have to maintain that style, I think, through up and down. I think this idea of changing your investment style during recessions, playing defense when everyone else is playing defense, is not the right way to go. And I think it harms investors over the long term. There's been plenty of academic study to show that the average fund manager does way better, or the average fund, I should say, sorry, the average fund does much better than the average participant in that fund, because those people cash in and cash out, trying to time the market and always get it horribly wrong. So I'll give you a recessionary, I'll play along nicely.
No, well, so then give me a company that you think is mispriced right now and that you can find opportunity for the long term. I'll make up a stock of the day question for you, Gaurav.
Well, for the sake of the viewer, I will mention Woolies. I think this is probably the safest business we have on the ASX. And I don't think it's crazily priced at the moment. So if you really have a low risk profile, you want normal returns from the market, then Woolies is a sensible bet at the moment. But look, I've been a broken record for the past 2 years, Nadine, about coal stocks and energy. And look, I think we're going to talk about them in a moment, so I'll leave my comments for them. But I think there are better opportunities right now for those willing to take on a little bit of risk. And running away from risk at the moment may not be the most sensible course of action.
Got it. Well, I know that you would agree with Woolworths, Mathan, as being one of those companies that is steady as she goes performer, safety in that.
Yeah. It's an inflation hedge. It's a safety hedge. You're going to buy food, and they pass on the cost, so they can hold their margin better. They can push down producers to take on the cost and give you a deal to get you to come there, like Coca-Cola's and Tim Tams, which is what I buy a lot, and you get a discount every couple of weeks, so you buy the discount. So Woolies is a great business model, and I think last time I was on a show
Yeah,
with
it
you,
was
Night Watchman.
Yes,
and
yeah.
we picked
Yeah.
Woolworths as a stock, and
Yeah.
I still think that's probably the best risk return value for that kind of play, because it's actually come back a bit, especially with the split out of with Endeavour came out, and I think it's a great stock. I think in the market. I disagree with Gaurav, and I love
thought you
Gaurav, but I disagree with the concept, but I understand where he's coming from. He is a fund manager. You cannot be a fund manager with a particular style of investing and be pessimistic. That's like, it's like sitting on a branch and cutting the branch and hoping you don't fall. You're going to fall, right? So you have to have that strategy. So I understand where he's coming from.
Yeah.
Market timing is always hard, especially we've had a decade of manipulated markets, right? So you cannot actually, there is no economic cycle, there is no business cycle, it's just a credit cycle. So it's really tough. But, there's always a but. This is a once in 40-year cycle where inflation is coming. They've got it wrong. They always get it wrong. This is the beauty of it. Central banks always get it wrong because of vested interest groups, right? And they're doing it again. They've got it wrong. Now everyone's backflipping. Even RBA is backflipped. It's plausible now when it was nothing for 2 years. ECB did a faster tapering, even though they're a complete mess. So you can see they're in trouble. Inflation's going to get worse. You cannot take away the economic risk when you got energy prices and food prices jumping by more than 50% in less than 12 months. Now these things people cannot live away from. You have to use it. So the bottom 50-60% of the population are going to be affected. So will it happen to a recession? Maybe, maybe not. But will markets worry about stagflation and recession risk? Definitely. So you have to have that aspect in your investing, and you have to look at stocks that are going to drive through it. I look at it and say every opportunity gives you a thematic that you can use. Food prices are going to be high. The problem with picking a food thematic is the input costs going to be high, weather-related issues, all of these things hit you when you're a food producer. Stick to the guys who are providing services to them. To the guys who are in the chemical sector. The fertilizers, the businesses that do the trading. So one that I was going to talk about was Elders, but it's run too hard today. It's up over 10%. And
to be fair, you've been on that for a while.
Yes, we have been talking about this for a while. Look, Instantech Pivot, it's gone back to highs.
Don't bring that up. You just want to. Nadine, he's been bugging me for months about Instantech Pivot, and I've been swatting him away, and I just hate it that he's been right.
You look at New Farm again. That's trading at the highs, and Elders today just went to pre-GFC high. Now, Elders 5-6 years ago was a basket case. Now it's a much better business. It's in the right cycle. Even if you have a peace deal in Ukraine and Russia, it's still going to have effects on the supply side on food for years to come. This is a supply side issue that was always a problem. The war just made it worse. So in this context, I think, a number of countries, emerging markets, are now actually banning exporting of grain products because they're worried about feeding their own people. This is only going to make it worse. So the food thematic, I know 6 months ago, all the analysts were telling me this is peak cycle earnings for Elders.
Yeah, I'll put my hand up for that.
Yeah. Next year will be peak cycle. The year after.
No, I'm not looking
You're going to shine in coal. Just sit back.
Every 6 months is going to be. So I think the food thematic runs well.
Okay.
It's defended, and people will have to eat, and people will pay up. So if you're looking for something that's leveraged to inflation and defensive in a recession, you look at the guys who are helping the farmers. Elders, New Farm, Instantech Pivot. Solid.
Okay, got it. Thank you guys, and I hope that does help you, Rob. Thanks for emailing in. If you would like us to answer a question for you, or try to at least, the call at ausbiz.com.au.